Welcome, everyone, and thank you for joining us at From Classroom to Boardroom, a virtual event series addressing issues of equity in the workplace and economic recovery in Charlottesville, Virginia, and communities across the country. It's hard to believe, but we are on the second to last day of this program. We'd just like to take a moment to thank our partners at the United Way of Greater Charlottesville for helping us bring it to life. Today's session will highlight a collaborative model for affordable auto loans, pioneered by the United Way in partnership with Carter Myers Automotive and Virginia National Bank. We're lucky to have leaders from each of those organizations on the call with us here today to share more. And without further ado, I'll hand things over to Robbie Rispetto, President and CEO of the United Way of Greater Charlottesville. Robbie.
Ben, thanks so much for having us with you today. We are absolutely passionate about this program and excited to share it with all our guests that are with us today on the TomTom panel. So I want to start by introducing our panelists. First, we have Liza Borchers. She's the President and CEO of Carter Myers Automotive. We have Glenn Russ, who's the President and CEO of Virginia National Bank. And we have a special guest with us, our own Barbara Hutchinson, who's the VP of Impact at the United Way of Greater Charlottesville. So thank you each for being here today. This program is something that we're very proud of, and its mission is really important, which is to provide fair interest rates to those with no credit or damaged credit in order to help them move forward toward financial stability and advance their career opportunities. And Driving Lives Forward is a multifaceted transportation program that again offers these fair market interest rates to individuals that have either poor or no credit and gets them into an affordable low-cost vehicle. So that's really the premise of Driving Lives Forward. And I'm going to turn it over to our panelists and have them each share a little bit about what the inspiration behind this program was for them and why they got involved. So Liza, I'm going to start with you.
Thanks so much, Ravi, and to everybody at the TomTom Foundation for having us this morning or this afternoon. The day has flown by. This really came about from conversations that started now, gosh, a lot of years ago, where we were sitting around a table with Ridge Schuyler as Network to Work. It was in their previous forum before Network to Work even existed. Barbara was there. We had some folks in the financial space and the insurance space really talking about the fact that transportation was one of the biggest barriers to self-sufficiency or financial independence in the Charlottesville area. There were two that childcare, I think, and transportation we were discussing at that point, and transportation was the one that we really did not have a solution for. Being that I have been involved with the United Way and many other nonprofits in this community for a long time, I started just racking my brain. There has to be a solution and we have to be a part of it. This is what we do. This is where our expertise is. This is where we can make an impact in the community. There has to be a solution. And so I think in about a year and a half ago, we started getting more granular on what this could actually look like. And that's where Glenn and some of these other partners came to be. And then really when COVID hit, we said, you know what, there's no waiting. We have got to launch this. So the whole inspiration was, this is the expertise of our company. This is what we've been doing for 97 years. It's where I'm passionate. It's the mission of our company is to move lives forward for our associates, our customers, our community. And this is the perfect program where we felt like we could make a great impact on the lives of families here in Charlottesville and the surrounding areas.
Liza, thank you so much for that. And I want to also mention just sort of housekeeping. If you have a question for us during this panel, feel free to put it in the chat session. I'll do my best to monitor those and we'll include them in the conversation as we go along. Glenn, why don't you go next and talk about the inspiration behind your involvement with Virginia National Bank?
Well, thank you and good afternoon to everybody. Virginia National Bank has a pretty good reputation in the community and we're known for actually helping a variety of the nonprofits. But what a lot of folks also don't know is we also do it not just through our dollars, which is very important, but we also do it through our expertise and our talent. And so when we were approached, it was, I think, unknown to the panel, most of the folks on this panel at the time, that we have actually lent our lending expertise to other nonprofits in this town. And so we have all the expertise, the back room, the documents, everything ready to go. And so it was a natural progression. We also really have a stand against what I would call somewhat nefarious interest rates. And we believe that there's a negative value to creating wealth in our communities whenever you have a large segment of the population is incurring what I call very large interest rates that actually takes real net income away from their families. So when we were approached on this idea too, it fit right in with our mission as well. And we were glad to lend our lending expertise and how to structure this thing in a very easy way to allow, when needed, clients to take advantage of a true commercial bank without some of the hassles that normally they would have never gotten in or thought they could have never gotten in. So this is our way of also contributing our expertise and time and talent.
Excellent. Thanks so much for that, Glenn. And lastly, Barb, I'll turn it over to you and have you talk a little bit about our vision here at United Way for being involved in the program. I think you might be, there you go.
Financial stability is our most significant impact area, because community health, school readiness, all of those kinds of things won't be successful if families aren't financially stable. And so our desire was to look at how we can create innovation in the community to inspire financial stability. It seems like we have had many programs and services in our community for years, but still struggling to solve some of the most daunting issues: housing, transportation, childcare, getting people gainfully employed with a survival income. And so we met in 2016, is what Liza referred to talk about the various components that could be in a transportation program and what was the greatest need. And since then, we've applied that type of innovation to our financial stability program. Where there's a gap, we've looked at how we might create a service. It doesn't mean that we are looking at doing that perpetually, but if we can create it and demonstrate that it can be successful, then perhaps the right partnership can become permanent in the community. So we established our family investment program, and that is working with families to create an action plan to help lift them out of poverty. And so this was a perfect program to pair with that and other programs such as Network to Work. And so we're very fortunate that Liza and Glenn were both willing to sit at the table and pound out the agreements and the processes and then launch. So we're excited that even this week, we have our third and fourth clients moving through the process.
Perfect. Well, let's talk a little bit about the loan program itself, sort of the nuts and bolts of it. Glenn, I'm going to start with you and talk about, like, how does it actually work when a client gets into the program and they need to get started on their application?
So
Who did you just say, Robbie? Okay.
Oh,
never mind.
Glenn, sorry. Yes.
you want me to go first, Robbie?
Yes, if you're sorry.
So what typically happens is that we're going to get a referral from the United Way, and it could even come from Liza, but most of the time it's going to come through United Way. And then we know that that person has kind of been pre-approved. And then what we have set up is there are funds that sit here at the bank to offset that loan. And this is really, really key, because how does a federally regulated institution literally get around what you would normally have to charge a higher rate? Well, the great work of United Way and others, those funds are kept at the bank so we can offset, just like if they were doing a cash loan, to a very reasonable rate. Then we just generate the normal documents, which, by the way, what's important about this for folks that have damaged credit report or actually no credit, they begin to establish in a very safe way the ability to generate their first credit report in some cases, or in other cases, repair some of the past credit damage that they may have incurred. So the significance of using a commercial bank is that you're actually fixing a lot of things that many folks didn't ever think they'd have a chance to fix or to actually establish an actual credit rating for themselves. And so by coming in through the commercial bank, it's really easy for us. We do hundreds of these loans a day, and it's a real simple thing. What they walk away with is also, they are kind of in the system, and that's not a negative way, because we want folks to be banked. We want them to be part of the banking system so they have access to a lot of the tools that we take for granted. And so by also getting them in through the bank, they become not afraid of commercial banking, and they understand then that they can have an account and they can do other things with it. So that's the importance of how we do it and the ease by which we do it, because that's what we do. That is our business, generating loans for consumers and for our businesses here locally in town.
Perfect. That's super helpful. And Barbara, maybe talk a little bit on the United Way end of things. How does the loan work when you meet with a client?
So we're receiving referrals from partners, for example, Network to Work and Habitat for Humanity's Pathways program. and then some of our own family investment program clients. And essentially where the person is referred to us explains their need, and we have them fill out an application at the same time, look at their budget, determine with their coach what they can afford in terms of a monthly payment, and is there going to be a down payment. And I shoot that information to Carter Myers, to Liza, so that she has the basis to search for an appropriate vehicle. The client then gets to test drive and look at a vehicle, and if the client decides to accept it, then we complete the approval process and shoot that pre-approval over to an appointed person at Virginia National Bank, create an appointment for the client to meet with the banker, and then close the loan and pick up the vehicle. And I might add to Glenn's remarks, I have been at each of the meetings with the bank, and I sit in the lobby and just listen, so that the client is going in as if they were any other client, and they're treated with great respect. But also, the person they're meeting with creates such a nice environment, warm, friendly environment. I've heard them start asking questions, and she kindly answers questions about banking in general and how to open an account, or what is a money market account, what is a CD. And so they're really extending their financial education through that one encounter with that banker, and feeling very good when they leave that, oh, they have a better understanding of loans, or they have a better understanding of banking products and how they might access them. And so this program is so good because it offers so much more than just an affordable car loan. And we're also working, as I mentioned, with a coach. So the folks that are coming to us are in the process of receiving financial coaching to ensure that they have the capacity for the loan, and that they understand the importance then of maintaining a good credit record and keeping that loan paid. We also work with their insurance company to set up the insurance, set up the lien on the insurance. And the insurance companies have been great because we also ask them to list us for any kind of notice. So if a payment isn't made, we have the opportunity to work with the client to figure out why it wasn't made, and make sure that auto insurance stays in place. So it's a wonderful process that offers so much more than just the loan in the long run.
Absolutely. Well, and I'm going to turn it to you now, Liza. And I know you have a slide that you were going to show to talk about what do you see when folks don't get into an affordable loan? Like, what type of interest rates are out in the marketplace that you've seen, through your business at Carter Myers?
I think the really important points that Barbara and Glenn just shared, as far as there's so much more to this program than just providing a vehicle, that the hopes is that we're putting enough structure in place to help these families through a 3-year process of having a vehicle, making their payments, having their insurance, having a good relationship with a bank, and having a good experience in an automobile dealership. Because our goal will be at the end of this loan that they would be able to come back in and get a loan on their own, having established credit, and feel confident in how this process can work. So I will definitely put up that slide in just a minute. We see a lot of clients coming in not through this program, where we're trying to help them and oftentimes can't get them approved. We see loans coming from Buy Here, Pay Here, or other independent used car lots, and they'll come in to trade in a car, and they'll have a crazy high interest rate that makes it so we cannot even get them out of that vehicle. So let me give a quick illustration of the different types of loans that these families could potentially be in versus going through the Driving Lives Forward program. Let me pull this up. So this is just a slide of, on the left would be a typical client who would come through this program. Usually the vehicle is around a $10,000 vehicle. That's going to fit into the payment range that one of these clients, maybe a little bit less than that, excuse me, depending on how much money United Way or the client can put down. But if we're trying to get them anywhere from a $275 to $325 payment, let's say, this client might come in at $329. And over the course of 3 months in our program at a 5% rate, they would pay $868 in interest over 3 years. If they were lucky enough where their credit wasn't terribly bad and we could get them approved through a normal loan, or maybe they just didn't have credit and we were able to get them approved at 17.3%, not through the Driving Lives Forward program, at the same 36-month rate on the same vehicle, their payment would be potentially $60 higher per month, and they would pay almost $2,500 more in interest over that same 3-year period. What is more likely is that a client like this would potentially be able to go to some other used car lot and get a loan in a really good situation, maybe at 29%, a 6-year loan on a $10,000 car that so often you may not have in fact, you almost never will have a reliable 6-year life on that vehicle. So they would end up in this particular situation where they could afford the $323 a month. They would be paying $12,318 in interest over 6 years, assuming that the car lasted that long and assuming they didn't run into any repair problems or maintenance problems that they couldn't afford. And so if that happened, they would be right back where they were, where they would have a repossession potentially of the vehicle. In the best case scenario, they would have paid $12,000 in interest over 6 years and have a car at the end. So I think that illustration is just so eye-opening to me to see the difference on the left of a client who could come through Driving Lives Forward and a potential situation on the right of the type of interest and length of loan that this client may end up in. And I'll just mention one other point when I said about maintenance and repair. By working with us and working with United Way and Virginia National Bank, we're able to watch this client over the 3-year period. And if they do end up in a situation where they have an unexpected repair needed, we are still the partner that can then provide that repair. We can help make sure that it gets paid for and that they can still make their monthly payments so that they're moving towards this idea of getting their credit back on track. So hopefully it is a full circle program that can help these clients through a 3-year period to financial stability and automobile ownership.
And Liza, on the screen that was just up, I'd like to make sure that everybody understands that most people would gravitate towards that lower monthly payment on the far right. That's from $390 to $323, and that is the trap. The trap is when they gravitate towards a lower monthly payment, this type of borrower never truly gets that $12,000 of interest is sitting there, and that 72-month is the killer of where that's accumulated. So that's the other important part about this graph, is that it looks like it's a cheaper loan when you're sitting in front of somebody saying, oh, I can pay $390 or I can pay $323, when in actuality, the interest paid is just devastating to that individual.
Well, and on that note, thanks for sharing that, Glenn. Barbara, can you talk a little bit about the types of clients that have applied for Driving Lives Forward and some of the challenges they face and other loans that they already have taken on that make it difficult for them to afford a vehicle?
Sure. For the most part, they are coming from the Habitat Pathways program. 3 of the clients applied for the Habitat homeownership program, but their financial condition was such that they weren't approved for the homeownership program, and they were offered the opportunity to join Pathways and work with a financial coach to look at what needs to happen. And so part of that was improving credit scores. And in order to improve the credit scores, that meant they had to get bills paid on time. It meant that anything that was past due needed to be caught up. It meant that they need to look at debt. And in fact, that's part of what we're looking at with clients right now, is how to help them pay off 36% interest rate loans that weren't auto loans. And Pathways provides the structure for that financial coaching to happen. And then through frequent meetings, clients get to see their progress and that there is hope and that they can move on. But what I would mention in particular, 2 families were 2-parent households with 5 children, both living in rural areas around Charlottesville. And so transportation was a must. And so just like any other family, both the parents needed to be able to work at their full-time jobs, but they also had to manage getting 5 kids to school, home, soccer practice, what have you. And both of them had car breakdowns that the cars were in such bad condition, they couldn't be repaired. And so that's how 2 of the families came to us, and both were able to walk away with 36 to 48-month loans with super great vehicles that would fit a family of 5. Basically both got minivans. but both minivans were inspected by Carter Myers. I know some minor repairs were probably made. So Carter Myers made certain that these folks were driving away with something that would be safe for 5 kids, but also would outlast the length of the loan and provide them for the foreseeable future with reliable transportation. We have another client that we're working with right now who has successfully moved out of public housing. She grew up in public housing on Hardy Drive and lived in Friendship Court. And she was determined that she wanted a better future for her children. And so she, again, tried to join the homeownership program with Habitat, but her financial condition was far from being able to be approved. And so she too, through her grit and determination, the board decided to allow her to join Pathways. And again, it was questionable whether she would make progress because of her debt. But 2 years later, she's made phenomenal progress in Pathways and has all past due accounts paid up, reduced her debt. And she was preparing to move into the homeownership program, graduate from Pathways, and her car engine blew up unexpectedly. So again, having nowhere to turn and not wanting to damage her credit, not wanting to take away the opportunity for home ownership, she was referred to us for Driving Lives Forward. So we're really excited that we'll again be able to provide her with reliable transportation and with a loan that won't impair her ability to move on to the home ownership program. And shortly after moving into a home, she will only have 2 years left at the most on her auto loan. So she will have the opportunity to sunset that one debt and further secure her ability to maintain her home ownership and move on with a successful life. And she's determined. She spoke at a city council meeting in the fall about how folks feel trapped in public housing that was never meant to be permanent, but they can't get out. And she is determined that her children will see their way to a successful life as she has done herself. So our final client that we're working with right now is successful. She's a teacher in our community. And she, however, still has to have reliable transportation. She lives in Louisa, but works in the Charlottesville Albemarle community. And so she has an extremely old car with extremely high mileage. And so she's moving into retirement and worried about being able to afford a car. And she's not giving up all of her community work. She's well known in the community. She is well known for supporting our underprivileged neighborhoods. So she does significant work working with Black families in West Haven and Friendship Court. And we want her to be able to continue that work as she retires. So again, she's working with us to find the right vehicle and then move into a market loan that she can afford, and then she can continue all of the volunteer work. It's phenomenal what she does for the community. So we're really excited to be able to help her. And I might add that we all know that COVID has struck Black families with greater disparity than white families. And we know due to our history that we have disparities outside of COVID. And so all of the families that we've served in this program thus far are Black families. And so we're really excited that we're providing that resource that will help them scale economically and be able to look towards a financial future that is stable.
Thank you for that, Barbara. Liza, will you talk a little bit about how you work with a family logistically in terms of picking a vehicle? It's like a whole orchestrated event to find the right size vehicle and to make sure it's within budget, to make sure it's safe. Can you go into some of the things that go under consideration when you do that process?
Yes, it was one of, I think, the most important aspects of this program and probably one of the most difficult, because often the price point of vehicle that we need to be able to provide for these families is somewhere in the $9,000 to $11,000 vehicle range or price range. And so often those vehicles have very high miles. So often those vehicles, we don't know, how reliable they're going to be over the next couple of years. For a family with a lot of children, the larger the vehicle, typically the more expensive, especially if you need a larger SUV. And so we knew going into this program that was going to be one of our biggest challenges, was how do we find enough vehicles or the right vehicles to be able to fit with these families. Luckily, we have 16 dealerships across the state of Virginia, and so we've got a huge number of used cars. So most of the ones that we have found have been something that's been traded in, that we then run through our shop and basically say, okay, this is actually a great vehicle. And Barbara will reach out and say, okay, we've got one coming in Winchester. I've got one coming in Williamsburg. Let's bring these over for the client to choose from. But it's not a real easy thing. We don't just have these cars growing on trees. We have so many people that need a $10,000 car and that they usually move very fast. The other thing that I'll just mention is we have one other vehicle that we did that wasn't directly through this program because we didn't end up using a loan. We had a vehicle come in on trade that we probably wouldn't have originally put out on the retail showroom, but our service technicians and our parts department decided to donate the time and the parts to be able to fix up the vehicle. And we ended up taking one of the clients from Network to Work who was in a desperate situation and needed a vehicle. And we ended up just donating the vehicle to this client. So there have been stuff outside of just the loan structure program, opportunities that we've been able to come together with as a team to be able to help families in our community. So most of them are ones that we go out and we find that have been traded in that we're able to fix up. But it is one of the most challenging parts of the program.
Yeah, absolutely. Glenn, can you talk a little bit about Virginia National Bank, and you talked about this at the beginning, but a little bit about the history of loan making. I know that when we met initially, you had worked with MACA at one point, that there's been this long-term interest in how can we best support the local nonprofit sector with affordable loans, but trying to find the right program. So I think we've landed on something that really works, but can you talk a little bit about the history around that?
I sure can. You've mentioned the Bank On program, which was our first foray into lending banking expertise to have a nonprofit or a group set up some funds that can be translated into multiple use. And that's the key here, is taking a set of amount of dollars and turning it into multiple use. And what I mean by that is, if you just make a donation, you're helping one person. If you make a donation and it's dispersed via a variety of loans, you can actually help 10 or 20 or 30. And so that was the test program that occurred about, oh gosh, time flies when you're having fun, but maybe 10 or 11 years ago. And since that time, there's been, aside from this group, there's been 3 others that we've done the exact same thing. Each time on the premise that a donation is great. And matter of fact, we would encourage people to still keep donating, but there are ways to turn $1 into 10. And then if the person has successfully, I might add, paid off the note, which happens in the majority of the times, which is also something that was the big risk, that the nonprofit, are they risking their dollars for a lost cause? And the answer is absolutely not. Most of the folks pay their loan back, which translates, it refunds the pool of dollars that gets reused over and over and over again. So what we're discovering is, and I think the Charlottesville community is really good about this, is we discover new ways to take $1 and expand it and then reuse it over and over and over again. And that's what I think is the unique part of this program, as well as some of the others in town, that have allowed banks, and I would encourage other bankers to get involved in this kind of way, because it is really beneficial. I think if you start all the programs and you look at over the years, there's been several hundred people helped, which, if everybody was doing this, we'd be able to turn that into several thousand individuals helped. But it works. It's going to work here as well. And of course, the other thing I love about it is it's the collaboration. It also proves that one group can't fix a problem by itself. So if you have a great car dealership like Carter Myers, and you have the United Way, and you have a bank, this collaboration works over and over again, and it uses the expertise of each group. And so that's the other thing I think is really important in this conversation, is collaboration works. And for many years, collaboration, we were told, does not work. So if you got the right group of people working towards a goal, which, by the way, Barbara underestimated the amount of work going into the contracts to make collaboration work. But if you have willing parties It's amazing what can happen for the good of the community and for the disenfranchised.
I just want to pipe in on Glenn's comment because I want to make sure that everybody heard this. One of the biggest inspirations for us to fund this program was the fact that it wasn't a one-time funding. And Glenn made that point that the money keeps coming back. So let's say we put 25 families out in vehicles, and as they're paying back these loans, those same funds are then going to the next 5 and then 10 and then 15 families. It's got one of the best returns on an investment that you could make as far as a contribution. So anybody else who might want to join us in helping to fund to support more families, I'm sure the United Way would happily share with you more about the details. But I just think it's such a great way to invest in the community, and it's just going to be a win-win over and over again.
And Liza, since you guys know I'm a numbers guy, if you loan out one loan and it gets paid back, you have 100% ROI. It's 100% return on your money. So that's all I'm going to say on the numbers before I bore everybody.
That's a great point.
Well, and so speaking of the investment in it, Liza, can you talk a little bit about sort of the corporate alignment with Carter Myers and this program and how your employees get involved in supporting the program?
Yes. Years ago, we started trying to figure out, we knew we gave a lot to the community dollars wise and time wise, but we knew if we could combine that with our expertise, which is in transportation, that we could make a stronger impact. I think the piece that we didn't realize until we really started getting together around this program was how much our employees wanted to see that the dollars they were donating were making a difference. And when they could see that they were donating dollars into a fund and see the clients coming back into the dealership and that we were helping them with vehicles and we were servicing their vehicles, and it just, like, all of a sudden, it just woke everybody up to say, this really matters, and people wanted to do more. So we've always been a great supporter of the United Way. We've always done employee campaigns, but we absolutely saw some new life and inspiration from our associates to want to do more, even beyond just doing the payroll deduction. So I think it's a great win-win if we can all look at how could we collaborate with United Way and other nonprofits to utilize our expertise and get our employees, our associates involved and hands-on and seeing how they're making a difference. So we're really excited to continue to grow that area of our giving.
And Barb, when we get resources, a donation or something from a workplace campaign, like how do those dollars actually support the program?
Well, so what we're looking forward to is opening the repair program. And so those donations will actually go into a fund and then fund repairs. Not necessarily, it could be a client in one of our driving lives forward vehicle, but more than likely what we see more often is that people can't work and there's a car sitting in the driveway that they can't afford to repair because it's $1,000 or $1,500, and it may as well be $10,000 based on their inability to afford that expense. So we're hoping to expand the program to look at the repair program and even a donation program, so we can increase fleet vehicles for Network to Work, where they're putting people in cars on a temporary basis, car donations to even go to a Driving Lives Forward client. And I might add, this is a popular program. We have other nonprofit programs that are desperate to be able to refer some of their clients here, but it's all about money. So again, the more donations that we can receive to go into the Driving Lives Fund, we'll be able to put more people in cars, repair cars that have been sitting, and most importantly, help keep parents employed because if they can't get to work, they can't make money. And we know that we don't have, the transportation program, the transit program. It doesn't serve all of the hours that need to be served. It doesn't serve all of the neighborhoods to be served. And for example, Farmington and Boar's Head are both large employers, but employees can't, the transit service doesn't run to Boar's Head and to Farmington, and other transportation programs have been tried there but failed because of the hours. The banquet ends at 11, and by the time cleanup's done, it's 1 a.m. And so how's an employee to get home? So the transportation issue is is much larger than our tiny conversation here. There's still a big nut to be cracked, but this program, I believe, has the capacity to expand and serve a much greater market.
And Barb, there's a question in the chat session from Henry McHenry asking about working with Mary Coleman at the City of Promise about their program. And their program works with residents at West Haven, 10th and Page to promote family self-sufficiency through a dual generation education. And part of the model is ensuring reliable transportation, and wants to know how we're collaborating with the United Way on that.
So we, in fact, are working with City of Promise on their program, but we gave them a grant this year to fund. It's an inaugural, there's 2 components to that program. And this is the inaugural year. And so they are receiving funding from the United Way to help that program build a solid foundation. And so hopefully as our fund grows, we would be able to open up the referral network, and Mary could start referring clients that she's working with to Driving Lives Forward. And as the repair program opens up, she would be able to refer clients that have cars that need repairs to that program. Our goal would be to look at how in the future, one of the things that Liza and I have discussed is maybe we could add more dealers to the repair part of the program to expand and make it viable to serve a larger segment of the population. So we are collaborating, and that's what we're looking at now. How do we open the doors to more referrals from other agencies? We needed to get through the pilot part of our year to make sure all of our processes were in place and everything works well and is strong. And then looking at the risk. And so one important part of our program is that we require a client come to us having received financial coaching and a budget reviewed by a financial coach. And that's a little bit different than just going to the bank, but that helps us look at risk, but it also helps them look at how are we going to pay not only for the car, but the car insurance. And that's the other component that we work with clients on is the insurance, making sure that they're getting an appropriate level of insurance that's protective, not only of the car, but for themselves in terms of liability. And then making sure that they've set their budget to be able to afford the level of insurance, the minimum insurance requirements that we have in place.
Thank you for that. And Glenn, I'm going to toss it back to you for a minute just to talk about access to capital, affordable capital, and kind of what that means in our community, and how difficult do you think that is if you are a low-income person?
It's very difficult. Access to capital is something that many of us take for granted. And then there's also a segment of our town that you can't take it for granted at all. As a matter of fact, you don't have access to it. So if you don't have access to capital, which is if you go back in time, I mean, like 50 years ago, 100 years ago, it was the denial of access of capital that has actually gotten us to some of the places where we are today. If you don't have access, and I might say access to cheap capital. So you could argue that a person that's got a 37% loan has access to capital. A true statement, but it's an ineffective access to capital. So it's important that your access to capital be defined by an interest rate that is, very, very affordable. Lack of access to capital will keep you impoverished in more ways than a person can imagine. We're talking about vehicles. You can add homes to that, which Barbara had mentioned. You can add about even repairs. If you don't have access to cheap capital, a repair becomes an event that you have to have the money for. So then where do a lot of individuals turn? You may turn to paycheck lending to go get the money to try to repair something. And the cycle begins. It is not uncommon to see that when you don't have easy access to affordable capital, what you see is almost all of your income. And we see this over and over again. Almost all of your income is going towards an expense on the interest side of your balance sheet on your personal income. And that's where the trap is now set. And that will continue over and over and over again. And it's just a repeat cycle that it's programs like this that really kind of break that cycle in one area. Unfortunately, you almost need to break the cycle in about 3 or 4 major areas. and keep it broken for about 3 to 4 years, and a person's on a very different trajectory then.
Perfect. And Barb, I know you have to hop off, but one final question related to that, and it's in the chat area as well. How important is the financial coach to this? We've talked about that today, but what value does that play in all this?
It's tremendous. Some of our clients have shared that until they started meeting with the financial coach, they had no idea what a credit score was or what its importance was. They didn't know what a FICO was. They didn't know the difference in types of bank accounts. They didn't know how to do a family budget, and they didn't know how to adhere to the budget, create emergency savings. And so starting to work with a financial coach not only gave them the education, but it gave them hope that they would be able to accomplish that. And I think that's probably the most significant thing, because without hope, clients just feel stuck where they are and they don't see a way out, and they might get, a nice refund, $4,000 or $5,000 on a tax refund because of credits, such as the earned income credit. But without an understanding and hope that they could improve their circumstances, that $5,000 doesn't go anywhere. It gets spent, as opposed to being applied to help lift themselves to a better position. And that's really the role of the coach, is to provide that hope and the mechanism to show them how. And then with our family investment program, for example, we're providing the cash to help move them along their action plan. Maybe they need to pay off a debt. Maybe they need to finish a certification program at PVCC, and they can obtain a better job with improved wages, or maybe a promotion at work. So again, I think that the collaboration is fabulous, but the coach is one of our pillars that makes it successful.
Absolutely. And with the new FOC coming online, that might be a way. Certainly City of Promise could refer clients there, but an asset to our community, and that they will exist to provide that financial coaching to members of our community.
Mm-hmm.
Well, I know you need to hop off soon. I will just say there was a question in the chat session about where is the program offered as far as the region. So it is the Thomas Jefferson Planning District right now. But I will kick it over to you, Liza, and we'll start to wrap this up with, it's a pilot, but now it's starting to become something that we feel confident we can grow and scale. Where do you see Carter Myers taking the program, even outside the Charlottesville community, in the future?
Well, that was certainly, one of our long-term goals, was if we could create a successful model here in the Charlottesville market, our next step would be to look to partner with nonprofits in the other 5 markets across Virginia where we do business. We are also, though, now working with a national organization, and it's still in the very early stages. That we've got a board put together and some staff members that are really utilizing a lot of the basic tenets of the model we've put together here in Charlottesville to launch something across the nation, which would be very exciting. And I'm not going to share too many details here, but I think we should be incredibly proud of the collaboration and the ideas that have come from Charlottesville in the first year of this program, to see that there's national interest in how could they make this a huge impact potentially on our country going forward. So I'll look forward to sharing more details on that as things come together, hopefully over the course of the next year.
Wonderful. Thanks so much. Well, I want to thank all our panelists. I know Barb had to jump off. Glenn, is there anything else you want to share before we wrap things up today?
No, I think we've said it all. So I appreciate the opportunity to weigh in.
Absolutely. Well, thank you both for being here. As we've all said, it's an innovative program. It's working well, and really, we're working together to grow the program and in the referral network that we have with other nonprofit partners. So, thank you both for being here. And Ben, I will quickly hand it back to you for just a moment to close things out.
Absolutely. Thanks, Robbie, and thanks, Liza and Glenn. We really appreciate you being here with us today. Audience members, if you missed any part of today's session or you'd like to share it with friends or colleagues, we encourage you to check out our YouTube channel. It's pretty simple, youtube.com/TomTomFoundation. You'll see this conversation as well as all of the conversations that have been a part of this series stored there for future reference. So thank you all, and see you soon.